From the University of Westminster, this is The Week Ahead with Dave Coker.
Hi guys, welcome. It's Sunday, March 14th. My name is Dave Coker, and this is, of course, The Week Ahead. Let's see what's going to happen over the next 5 trading days, what news and information you have to be aware of. So key events. Oh my God, my animation. Sorry about that. Key events that are happening. First of all, we got the Federal Reserve policy meeting. We're going to be seeing some interesting stuff coming out Thursday, I believe. We'll pick it up in the daily in terms of interest rates and other factors like that. So you do have to pay attention to see what the Fed is mentioning. Retail sales are coming in. These are important because, once again, consumption is a very, very large part of the U.S. economy. Consumption down, GDP down. It's really that straightforward, that simple. Q4 earnings still kicking around. There's a couple big names coming up this week on the earnings side, so we'll have to pay attention to it. It's FedEx and Nike, and there's some other retail companies, Dollar General's in there, and some software companies, things like this. So it's something that we have to pay attention to just to see exactly how Q4 did. Although Q4 was very strong, but we'll see about these guys, and we'll call it an end call it finished by the end of the week. We have policy meetings for both the Bank of England and the Bank of Japan. So there's a lot of central bank activity this week. 3 big central banks are announcing policies or making decisions. So this potentially could be very volatile across the entire plane. All right, let's take a look at the S&P 100 or 500 SPX. We're looking at it over the past week, guys. And you can see when you look at this chart, very interesting performance over the past week. Some tech stocks starting to move back up. Amazon, we consider it part of the FAM, so it could be considered tech. Tesla, what an amazing run up in Tesla. And it's really fascinating watching Tesla. I'm not really a fan of the company. I only invest in companies if they pay a dividend. It's interesting to watch. I do think it's overvalued because lots of different companies are making electric vehicles now. When Tesla first launched, of course, it was only them. And now most of the manufacturers, I think all of them actually, have announced or are actually selling EVs. So their USP, as we call it, their sales proposition, their unique sales proposition is gone. And it'll be really interesting to watch how this plays out over time. Microsoft on the technology side up some 1.79%, Apple down. And again, I've been pimping the banks to you guys for several weeks. You can see, looks beautiful down there. JP Morgan, Bank of America, Citibank, Wells Fargo, all moving to the upside. Really interesting. Now, I thought what we would do is we take a look at the S&P 100 over the S&P 500. I don't know why I keep calling it that. The S&P 500 over the past year. Holy cow, look at this. Absolutely incredible performance. This was one of these markets where you just had to buy something. It was like, you'd have to do pretty bad not to make money in this market post-pandemic. Once we started to move out of the pandemic, it was pretty clear that we were going to start to see lots of shares rise. And so it'll be really fascinating to watch the performance as the nation becomes vaccinated. But over the past year, you've seen really sharp run-ups, and it was the most amazing thing. You just had to buy something. That's pretty much all you had to do. All right, let's get into the daily. So on Monday, March 15th, we got the Philly Fed employment number for March. Prior was 25.3. We don't have a forecast. Now, this is an interesting one. It's actually part of the Philly Fed Index, which tracks economic performance in the states. And here we're looking at the employment factor. So we'll pay attention to this. If it's larger than expected, it's positive for the dollar, and the reverse is true as well. We've got, at 1300 hours, we've got 10-year TIPS auctions. We don't talk about this enough, guys. This is really interesting because I don't think I've mentioned these before, I should say. These are Treasury inflation protected securities. They pay off in real terms. And they've been trading solidly negative for well over a year now. I mean, sharply negative too, not just a little technical like we saw back in 2016 when they briefly went negative. This is really deep in. If you buy these instruments, you're getting a negative return. And it makes you wonder why people would buy them or why entities would be involved in them. Well, they would be involved in them because it's a guaranteed payoff. It's an inflation adjusted payoff. In other words, you don't know. If you just buy 10-year notes, you have no idea net of inflation what your payment's going to be, what your return is going to be. Here you know you're losing almost 1% of your money, but some entities are willing to do these. Buy these. It's really fascinating. Of course, TIPS have been traded in the United States since the late 90s, I believe 97. And most of the developed markets have some type of inflation protection you can get from the central banks. On Tuesday, March 16th, at 0830 hours, we got retail sales month to month for February. Prior was a 0.6% contraction. We're forecast to come in at a 5.3% uplift. At 9:15, we've got industrial production. We're looking at this month on month for February. And what we're doing here is we're trying to understand the total inflation adjusted value of economic output by manufacturers and miners and entities like that, perhaps utilities as well. So it's an important component. Prior was a 0.9% contraction, increase. It looks like it's going to contract a little bit. It's going down to 0.4%. Yeah, before Mr. Biden's stimulus came out, guys, the economy was really slowing down. You wouldn't know it by looking at the stock market, but it really, really was. Just looking at the data that we consider every week. On Wednesday, March 17th, this is a big one, guys. We got at 1400 hours, we got the FOMC statement, we've got the Fed interest rate decision, and we got the FOMC press conference. Now, the FOMC statement, again, grab it, read it, especially if you can't watch the press conference. It'll let you know what the thinking was. And when I tend to identify when FOMC governors are speaking publicly, and I advise you to listen to them. When we see the statement, almost always it's not a surprise to me because I've heard the input from all these different Fed governors over the past, well, it's every 6 weeks. So past 5 or so weeks, I've heard what they're talking about. I know what's on their mind. So I'm never really too surprised when I read the statement. We'll have to see what happens overall. People do say there's about a 5% chance, I believe. I'd have to look at the futures contracts again. There's about a 5% chance they'll raise. I don't think so. It'll be interesting to see if they raise. And in any case, guys, it's at 25 basis points already, interest rates. So they're unlikely to raise interest rates. But, anything's possible, I guess. It's be entirely interesting. On Thursday, March 18th, at 0830 hours, we have initial jobless claims. Now, once again, guys, you know how this works. We look at this every week. This is the people who are filing their first claim for unemployment. In other words, they lost their job and they need some government support. Prior was 712, forecast to come in at 705. Those are thousands, by the way. And yeah, that's a huge number every week. These are unique claims, unique people. It's not the same people filing every week. These are new people making their first claim for unemployment. At 0830 hours, we got the U.S. Philadelphia Fed Manufacturing Index. And what we're doing there is we're looking at business activity in the Philadelphia metropolitan area. And we're trying to see what's going on with manufacturing in terms of business activity. Prior was 23.1, forecast at 23.1. In other words, flat, flat, flat. On Friday, March 19th, at 10:30 hours, we got 2 pieces of data coming out from the U.S. Baker Hughes oil rig count. And once again, we're looking at the number of oil rigs that are active with the first number. Prior was 310, we don't have a forecast. And in the second number, what we're doing is we're looking at the total number of oil rigs that are out there. And prior was 403. We don't have a forecast on this. All right, guys, this has been the week ahead for March 14th. Once again, 5 trading days. Markets are on fire, guys. The money is coming from Mr. Biden. There's absolutely no reason why you can't make money in this market. We largely suspect a great deal of that money is going to end up in the stock market, or who knows, maybe NFTs. And I'll leave an interesting link for you guys down below. I am active in the NFT market. All right, thanks again for your time, guys. Have a wonderful and profitable week. Take care.